Mutual funds are a great way to diversify your portfolio, but just how much will it take to invest in them? Hello, I'm Rashan Gidwani. Welcome back to another episode of Finance Zen. Today, I'll be telling you all about how mutual funds are priced and how the returns are calculated. Mutual fund prices are based on their net asset value, or NAV. The NAV is calculated by the fund's portfolio manager at the end of each trading day by subtracting any fees or expenses from the total value of the fund's assets and then dividing the result by the total number of outstanding shares. This gives the NAV per share. So let's say that a mutual fund has $100 million in assets and $1 million in liabilities, with 10 million shares outstanding. The net asset value per share would be calculated as follows. The net asset value is calculated daily and used as the basis for buying and selling shares in the mutual fund. So if you're interested in buying or selling mutual funds, then they'd cost what the net asset value is plus any fees or charges on top of that. How are the returns calculated? Mutual fund returns are calculated based on the changes in the net asset value of the mutual fund over time. There are two types of returns that investors can expect. Absolute return is a measure of an investment's total return, regardless of how long you've held it. You calculate it by subtracting the initial value from the final value. For example, if you invested $1,000 in a fund that grew to $1,250 after 3 years, your absolute return would be $250 or 25%. This metric helps investors see how profitable their investment is. It also represents the actual gains or losses generated by an investment, without considering the impact of compounding returns. Absolute returns are useful for evaluating the overall profitability of an investment over its entire life. Annual returns, on the other hand, represent the percentage increase or decrease in an investment's value over a one-year period. It is calculated by dividing the investment's ending value by its starting value and then subtracting 1. Annual returns are often used to compare the performance of different investments over the same period, such as comparing the annual returns of two mutual funds for a particular year. So are mutual funds safe to invest in? I'll explore this in the next episode of Finance Zen. Till next time, ciao!